Creating live broadcast. Oh, I've got to pull it up on here. This is what I wanted to do. I should take a picture of what I do. But I got to turn on I am now live. I just got the email. Do not disturb. We're going to go here. We're going to go to my channel. I'm doing my scans. I bring that up, so I am here. So, I got it live. Okay. Scans. This is, I've done a couple already. There are, so many live stocks. This is just all the ARK holdings, which I'll hold off on mentioning because we need to look at the Dow Jones 30. Energy was way up yesterday, but that's what I want to bring up. We're going to do this. We're going to copy this, and we're going to bring this down too. I got a lot of notes. And PXD. Okay, scans. Disney, Cisco, IBM. I like Cisco. It's just a good stock. Let's see. Stop. Oh, stop. Okay, we did the Dow Jones 30. We're going to do the NASDAQ 100. Where is it? There it is, NASDAQ 100. This is just all the scans. So you guys know what I do is, CTH, AMD. AMD was a big one. I like AMD, especially down at these levels. Regeneron, PayX, Paychex. That's a great company. Look at that slide. Let me see. PayX. Because even during a recession, you're still going to need paychecks. 27 is the PE. 2.87%. It's down 19%, so it's beating the S&P. Let me just make sure I know what S&P. SPY is down 22%. Okay. I like PayX. Let me look at the chart. Look. See, that's COVID. It still hasn't pulled back to COVID levels. Why would I think it's more expensive? Nah, I'm not going to recommend it. Tesla, by the way, we had a cross up. You see the button hook at the bottom. It was oversold. It's RSI. It's going to cross up. Earnings are coming up, crossing up right before earnings. I'm going to bring this up. So essentially, I read an Tesla cross up, possible buyback with so much cash could boost stock way up right before earnings. I brought that up yesterday on Twitter. So, okay, that's the NASDAQ. Let's look at the S&P 100, and then we'll go to the energy sector because for everybody asking me, is energy still in play? Abso-freaking-lutely. Southern Company. Wow, look at that one. This is a utility. Why in the world is this so low? SO. This is part of the due diligence that I do before the actual podcast. 4.25% dividend, down only 6% this year to date. Look at that pullback. August 4th upgrade, 76 to 87. And right now it's trading at what, 64? Starts nuclear fuel load. Is this why? Does this have to do with the Southern Company is the owner of Georgia Power. They started it up. Wow, I'm going to put this one on. This may be my stock of the day. Just like Duke yesterday. Like DUK. I'll have to do some research into why this one. Duke had a cross up. There we go. Remember how I said Duke was beaten up unfairly? There we go. There's the cross up. Morgan Stanley had a cross up. MasterCard, cross up. This one usually goes to 320. There's a couple of gaps here. Could be increased. Bristol Myers. I think that's the weekly stock pick. He had a cross up, but it's Friday. Zephin. There's a high-pitched noise. I think that's my... Oof, that's not good. I am sorry about that. Let me see if... Zephin. There's a high-pitched noise. I think that's my... Oof, that's not good. I don't hear it on my stream. Sorry about that. Let me see. You know what that may be? There's a high-pitched noise. I think that's my... Is it gone now? Oof, that's not good. I don't hear it on my stream. H-E-A-R, Jesse. Let me see. I don't hear it on my iPad. You know what that may be? Tell me if you guys still hear it. I'm going to continue doing scans. I think I corrected it by pulling out the plug on this thing. Maybe what I need to do is... How's that? Is that a little bit better? Not yet. Boy, if you guys are hearing it. Okay, sounds good now. Thanks, Jeffrey. Last thing I want is a high-pitched sound interfering with this. Should I bring up IBM? Wow. It's an ugly chart. It doesn't move much. Let's see what their beta score is. That doesn't move much, 0.83. I don't want that one. Let's go to the energy sector, and you are going to see a shit ton of cross-ups. It may just be too much for me to actually cover. God, I love TrendSpider. It is still there. Okay, you guys that are hearing the high-pitched sound may be dogs. I didn't hear it, but I have tinnitus from being a 80s hair metal drummer. And yes, I was a hair metal drummer. Not in a band you ever heard of unless you traveled around the bars in New Jersey with bands like Danger Danger and Bon Jovi and things of that sort. It's still there. I wonder what it could be. I don't have any sound on. Is there a... God, I hate that you guys hear a high-pitched sound because I don't hear it. And I don't have the noise canceling on my headphones either. And let me see. I'm going to turn up the sound. I don't have any sound on. Is there a... God, I hate that you guys hear a high-pitched sound because I don't hear it. And I don't have the noise canceling on. I'm with you, Jeffrey. And you guys hearing a high-pitched sound. I think you guys are dogs just hearing it. And Jesse, I think I have picks. I am not putting those out in public. I have a reputation to defend. Okay, I think I got all my scans. So rather than go on and on, how long have I been? 9 minutes. Started 9 minutes ago, so I need to put that in the podcast. I don't want to squeeze. There we go. Okay. I'm going to start the podcast. So you guys on YouTube, just so you know, I kind of ignore YouTube a little bit. I'll get to you guys once I get through my notes. Just so you guys aren't quote unquote offended. Ooh, ARCs are up. Look at that. Okay. Let's go back here. Good morning. It's Friday, October 14th. If there's a high-pitched squeal, I am on YouTube Live. There are some, I am referring to them as the dog pound, saying that there's a high-pitched squeal behind me for some reason on YouTube. There are others of us who can't hear the high-pitched squeal, so I'm saying that they are dogs. Yesterday, my personal apologies for yesterday. I am not the only one. I will say this. I am not the only one who saw none of that happening. We were on Active Trader Pro a little bit for about maybe 30, 40 minutes. I think there were about 7 to 10 of us on YouTube Live, where I was kind of going over a little bit of the Bollinger Bands, a little bit of the candles, blah, 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 the whole thing. So you could see it. And I kind of went for a run, and then all of a sudden, it was crazy, just crazy. I came back, and the market was way up. Never expected it. There was nothing that indicated to me that that was going to happen. Now, when I look at the S&P, if you look, this is a daily chart of the S&P, and you can see this is why I kind of say that we might be going back up. At some point in time, 3,200, there's a key level at 3,200 on the S&P that if we are going back before COVID, that's where it's got to cover, and it's this gap. But it's July 2020. It's way back when. You did have a cross up of the S&P on a MACD basis. It does look to be kind of in no man's land with an RSI of 43. But that candle right there is huge. It goes, the SPY yesterday opened at 349. The low was 348. That was during the trading. During the pre-market, I think that was closer to, somewhere in the neighborhood of 334. The high was 367. It closed at 365, 4% during the period. Just to give you an idea, this thing never if you look up here in the upper left, as I scroll through, you don't see 4% in the period. It is significantly below 1% on a daily basis. So that is a huge swing in the SPY. Nobody expected it. Why did it happen? Nobody can say for sure why. The Bank of England, the government of England, there were rumors, there was a report that something's they're gonna go back on their taxes, which made the dollar weaken against other currencies, which again is going to help our stock market because corporations reporting earnings won't have currency issues. So there was that. But then the CPI number came in hotter than expected. Inflation is still around. There's still an issue. The indication that I think the best explanation I heard was from Bob Pisani on CNBC. And now, don't ask me how the volatile index, the VIX, VIX, is actually calculated. When we talk about UVIXI, that's what we're talking about. With UVIXI, you're expecting the VIX to go up. With SVIXI, you're expecting the VIX to go down. With UVIXI, we expected it to go up. I completely expected UVIXI to fly yesterday. It did not. There were a couple of reasons. There's really 33 VIX indicates a 2% price move daily on the S&P, and 33 is 2%, and as I scrolled through there, you could see there really wasn't a 2%, but the expectation is with the VIX at 33, it's going to be a 2% move. There are three things that are really moving that VIX. There's the CPI, which was inflation. There's the Fed meetings and the hikings, and then there's elections. And the best explanation I heard was the 33 on the VIX, which indicates a 2% price move. Two of the three catalysts to move that up wound up moving the VIX down, which then triggers algorithms to start buying. And big money start, quote unquote, moving in. That's the best explanation I heard. as to why we went up yesterday. It was a VIX rally. There wasn't a catalyst. Yeah, we were slightly oversold, but it wasn't a crazy oversold market. Again, the only question is elections. So the VIX is dropping since 2 out of 3 are out of the way. The elections are still in play. I honestly, I'm eating pie here, humble pie, because I had no idea that was going to happen. Now, there were a couple of people who tipped me like a bartender, 2 in particular. Jesse was one, but who said, "Hey, I played traded the trend, and once the trend changed, got out of their positions." I think there was a few people in SOSX, a few people in SPXU, a couple people in SQQQ. I know I heard from probably about 10 people yesterday, 10, 15 people, about positions that they exited because trading the trend. Remember, one of the questions on YouTube Live yesterday that we were talking about is why I use weekly, why I use monthly, why I go to a 1 minute, a 5 minute, or a 4-hour chart, and it's to find trend. If you're on a 1 minute, or if you're doing day trading and you're trying to have a short position, you're going to have a shorter chart, meaning you're going to have a 1 minute, a 5 minute, maybe a 4-hour chart if you're swing trading just by a couple of days. If you've got a longer term position, look at your daily charts and understand that the trend will change from those charts when you actually look at it. Your moving averages, your 200-day, your 50-day, your 9-day, your 21-day. Those are the moving averages that I use. Your MACD, all of that stuff will change when you change that time frame of chart. So trading that trend, these people understood, hey, the trend changed. Now, overall, the market trend didn't change. We're still in a downward market. Look at this SPY that's up on my screen right now on TrendSpider. If you look at that portion, you can still see that 200 is still in a downward movement. Yeah, you've got some gaps here, but it is also clear that 200-day is providing resistance, not support. It used to have support here where it bounced up. It would go down towards it, and then it went up, and then we lost all of that support in January. It is now providing significant resistance. And that 200-day is right at about 416. There's some gaps below there, but there is no indication that this is the actual bottom and turnaround. I still continue to say we're seeing some type of bounce. It's going to take more than just 1 day to make that bounce stick. Yesterday's S&P, it's the widest intraday trading since COVID, March of 2020. The candle size is huge. So one of them that didn't move much yesterday at all, is Amazon. I thought this was kind of interesting. We don't have a MACD cross up. You can see, look at that MACD. It's just kind of flat. We're still kind of below it. It just crossed down a few days ago. You had an opportunity yesterday to get it at close to 100? Yeah, 105. I think 105 is a pretty good purchase price. I still think 110 is probably your pivot point on Amazon. Consumer discretionary didn't participate yesterday. It didn't, even the ARKs. You look at ARK-K, which is their flagship. We don't have a MACD cross up in here. It is up this morning, but look at how far that is from actually crossing up. You probably get in a couple of days, but again, that 200-day right there, you can clearly see since August, that's been providing a resistance level. So if you're going to buy into ARKs at 36, I wouldn't expect to get above 40, maybe 42, 44. That's ARK-K. ARK-W, this one's up 4% in the pre-market. I don't even know why. I'd have to look at the holdings to see why the hell it went up that much. But it didn't participate in yesterday's rally. ARK-F, financials were way up yesterday. JP Morgan Chase, you could have bought, remember how I said around 100, buy it? It's at 110 right now in pre-market. That is a crazy, crazy good stock. So you've got these 200 days on a lot of these stocks are providing resistance, not support anymore. That is a good way to determine, hey, if I'm buying in here, and we get into a really flying market and the uptrend starts, if you identify this before you get in as a short-term trade, that'll provide you some resistance level. Now, positive stocks. I'll just bring DRV into this as an example. And DRV yesterday got killed. I mean, it got destroyed. Yesterday's candle, the morning candle, and I'm on 4-hour candles, so the morning candle, which closes at 1:30, so it's 9:30 to 1:30. The open was 83. The high was 84. The low was 75. It closed at 75. So you went from opening at 83 down to 75. I would say, again, if you're in DRV, you're seeing the button hook. I can tell you, the last time this happened was a week ago, September 30th, where I said, if you're in this one at 66, I'd get the hell out at 66. Well, and I posted that on Twitter, and then somebody said, what? It's up 10% today. Well, fake me out. The algorithm knows better than I do on that particular one. But it's getting another button hook here, and it's run quite a lot. If you're holding on to this one, remember there's a triple levered bear on the real estate market. It's triple levered, so it moves quick. It also is a decaying asset, so it's not an investment strategy. This is simply something that you use to trade. You use to play the market. You use to hedge. Say you own home builders or you own American Tower, which we talked about yesterday, which is a big, has gotten beaten up and is a large holding specifically in DRV. But you can see that button hook starting. So if you own this one, you're on a Friday. You've had a good up day. You can move it. I'd say that, again, that the moving average, I have a 21-day moving average here, which is the yellow line. That's one where I would say, hey, you probably want to look at, that one as resistance, and it's at 71 right now. I'm sorry, support. It's at 71. So I would just look at that. And again, remember, you're trading the trend. This is an upward trend. DRV, make no bones about it. This one is an upward trend. Yeah. So here's one thing that I noticed yesterday, and I'm reading my notes because it's a little hard to explain. But Apple, we had a cross-up of Apple, which you guys know I don't trade it, but if you wanted to trade it, 140, 172. I've said, hey, when it dips under 140, that is an absolutely fantastic buy. When it's in the 140s, I think you're doing well. I think, again, 10 years from now, are you going to be upset that you bought it at 144 versus 141? No. Are you going to be upset that you bought it at 142 versus 137? No. So you've got an opportunity here with a MACD cross-up. I wouldn't say this is the greatest setup that I've ever seen, but you do have some gaps here between 143 and 144 and 160 and 163. And there's a small gap up here at about 171 that has not been covered on the way down. So it does need to be covered on the way up at some point in time. Their earnings are coming up October 27th, so you do have a catalyst. Here's what you have to understand. More than likely, most of these companies are going to either bring down their forecast or they're going to have some type of weakness in their current earnings. That's just a guess. Has it been beaten down enough to actually accept that? With Apple, I don't know. Again, we talk about Apple specifically, the market wanting this to be just a kind of normal S&P company with the PE at 23, or I'm sorry, the PE at 17. It's currently at 23. It wants to bring it down to 17. So they're going to have to do something crazy. They do always buy back a ton of stocks. They do whatever. But that is one. What my point in bringing up Apple is not just the cross up. It's because yesterday what we saw was people, it almost seemed like people were rebalancing for the end quarter. And I say that in that energy went up, Apple went up, Microsoft went up. So those three things were big movers. And they seem to be a flight to safety because energy, we all know, I can't say it enough. Energy is still in play. It's still working and it's still on a positive trajectory. So I think, those three things. Let's look at Microsoft. Did Microsoft have a cross up? That was quite far down. I don't know that had a cross up. No, we didn't have a cross up on Microsoft. It's getting close. I can tell you that. I texted a executive at Microsoft yesterday who I'm personal friends with. And I said, aren't you upset? She had texted me, we're down to 227. I'm going to barf. And I said, don't barf, buy. I said, change your B. And she texted me later in the afternoon, oh my God, you're the best big brother in the world. But yeah, you can see the candle there. I mean, again, part of this is we were in, 6 straight down days. You needed a positive day. It did what it needed to do. But if you look at Microsoft, you got a gap here between 241 and 246. You've got a gap here between 260 and 265. You've got a gap here between 282 and 285. At some point, those probably get covered. You're trading at 235 right now. 235 to me is a fantastic price. If I didn't have six figures into Microsoft, I'd probably be buying more. Google. Let's talk about Google, GOOG, because GOOGL doesn't perform as well because they buy back. We had a cross up here at 99.63. I said anything under 100, you guys can buy. It's trading at 99.68 right now. Let's see. I own GOOGL, and that's over 100. But get this one under 100. I mean, it is in no man's land, but you're not going to time this thing for an 80. Just start adding. If you want 100 shares of this, say you want to buy a $10,000 worth and you want 100 shares, buy 10 today at under $100. If it goes over 100, who cares for the next week or two? Wait to see what it happens. If it hits 110 and you see the trajectory going and it's not overbought and the RSI is low and the MACD is still under the oscillator, go ahead and add 10 more shares. You have time. Be patient. That was one of the things I told people yesterday too. They were like, oh my God, I got to buy into this rally. Don't buy into a rally. Buy on those days. You should have bought the day before when it's painful. Warren Buffett's advice, be greedy when others are fearful. Be fearful when others are greedy. Perfect example. Don't buy into yesterday's rally. SOXL. I had a couple of people in SOXS because that was the trend. SOXL had you out, but wow, that was a big candle yesterday. Yesterday morning candle. The open was 642. The high was 836. So let's see. What's 2 divided by 6? It's a 30% move? 33. 33% move. In one freaking candle. Again, this is a triple levered semiconductor. And they've been beaten down. So SOXL is the long one. This is the one that did great yesterday. SOXS, you could clearly see the momentum had shifted. And it was the start. This one, you went from the open at 87 down to 66. You're trading at 70 today. It's slightly up. Remember, we had that buy-in on October 10th at $70.89. I said the danger of that buy-in is there is a gap below here between 53 and 57. At some point, it's coming down there. There's another gap here between 45 and 48. That one's going to be filled as well. You're going to have these gaps filled. And the danger is when you buy into these quote-unquote rallies, you want to be careful. Let me pull the volume indicator. Where is it? I want to look at the volume shelves a little bit more close towards this last high, which was July. And I'm looking at SOXS. You still got those gaps, but see here, look at the volume. And I only pulled that back to July 1st. So from July 1st, which was a semi-high, the next couple of days, July 5th, seems to be the high. But this is using the algorithm on 4-hour charts. Look at those volume shelves. This means that almost everybody or the majority of people who are holding this stock from July 5th, who had purchased it from July 5th forward, they're holding it down here between 30 and 35. Those are people who timed this bottom and timed it perfectly and have doubled their money. Or they bought in at this second capitulation right here, and that's between 53 and 50. As those people start to see this buckle down, they're going to start selling, and you're going to see these volume shelves start to move down, and you'll see these volume shelves up here start to move up. Now the people who are buying up here, dummies in my mind, absolute dummies. I won't call them dummies per se, because there might be a reason. They might be shorting it. You could buy it at this. Who knows? They might be forced to buy it, brokerage houses and blah, blah, blah. But clearly you can see that MACD is kind of crossing down. The RSI is at 58. I think this is just a simple, if I were to look at this and the SOXS, I'd say, you know what? I think the SOXS is going to change and switch course, and it's going to be SOXL. And you can see the gaps up here, not down. Gaps are up. So when you buy this one, you're looking at the gaps. It's trading at $7.96. You're looking at the gaps at $10.37, $11, and you're looking at the gaps here. Shit, I may get in on this one. I like this one. But remember, my initial, and I always say this, it's a Friday. You don't know what's going to happen over the weekend. Bank of England could come out and say, hey, we're going to start tightening again. All of a sudden, we get back into interest rates, bond rates going up and equities going down. But I like SOXL at this point in time. Sorry, I had to cough. JP Morgan, Goldman Sachs, going nuts. I mean, they went crazy yesterday. I think 4%, 5% move. JP Morgan Chase has a buy-in at 109. Like I said, anything around 100 was the buy-in here. It opened at 101 yesterday. It got all the way up to 110. That's a 10% move in a financial stock in one day. It's unheard of. Absolutely unheard of. Let's look at Goldman Sachs, but you did have that cross up there. Goldman Sachs at 109. And let me see what JP Morgan's book value is. That's what you want to look at with banks, is the book value. The book value is 85. So you're buying it slightly above book value. Goldman Sachs, you had a cross up at 307. I said anything under 300 is a fantastic buy on this one, because the book value is 301. Their PE is 6. Their earnings are coming up October 17th. So next week, Goldman Sachs reports earnings. Let me see. Citi beat. Morgan Stanley slightly missed. So let's look at Citi. We can look at that stock to see if we have a cross up. This is in a negative trend. We had a cross up at $43.07. It's trading at $42.97 in pre-market. Let's switch over. Let's look at Citi. I'm going to switch over here, and we're going to look at Citi. I'll talk about that TQQQ move as well. You can see Citi came out with their earnings earlier around 8 o'clock, completely fell. It's recovered. You go down to 41. You've recovered up to 43. Again, you can see with that big Bollinger Band, and it traded outside the Bollinger Bands. Outside the Bollinger Bands for twice. Once you get inside that Bollinger Band, you usually have confirmation that you're going to start to move up. And obviously trading, once you're above that 9-day, which is the green, once you're above that 9-day, total confirmation. You sell it when it gets kind of doesn't use that 9-day as support anymore. Right about here, I'd say 43. If I had bought at 42, I'd probably sell it here at 43. And this is a 1-minute chart, so it's super, super quick. But that's Citi. Morgan Stanley, we can look at Morgan Stanley, and they had a cross up at $43. Morgan Stanley, I personally own. I am way down on this one. I think I bought this at like 109. I chased this one in pre-market. I remember me chasing it when somebody, I think there was a famous hedge fund guy who came out and said, yeah, we're buying this. Oh, lost audio? What, are you kidding me? What is going on with this? I think I'm still recording on GarageBand. Yeah, I'm still recording on GarageBand. I'm going to pause it. Can you hear me now? Oh. Okay. I'm going to start recording. Okay, you retracted the message. You guys can hear me on YouTube, right? I paused the podcast. Perfect. Thank you. I do pay attention to YouTube every now and then, Jesse. Okay. So, sorry, I get told that I lost audio on YouTube, but I guess I didn't. But Morgan Stanley, you have a cross up here at 79.29. The RSI is down at 46. Let's look at the book value of Morgan Stanley. I think it's around 60. Book value 55. Look at that chart. So you've seen it move from 38 or pre-pandemic, right around 51. If the reality of the situation is that it wants to go back down to pre-pandemic levels, it's going to go down to that 51. But this shows you the value of buy and hold. That's all this is. This is a great company, really well run. They just bought E-Trade. They're doing well. Netflix came out. Remember how I told you, hey, Netflix had a cross up, and I think you could buy it at a certain point. Well, that certain point seems to have maybe come yesterday. And the reason I say that is the ad tier came up, and they will charge $6.99. $6.99 per month. You will get, I think they said something like 4 to 5 minutes per hour of ads. So it's significantly less than broadcast TV, which I think it's for every 30 minutes they do 10 minutes of commercials. So it's significantly less. You didn't have a cross up. You're still out of this one. The MACD is going to cross up probably today. I would say if you buy this one, if you want to play the earnings on this one, and again, it's gambling on earnings, but if you want to play the earnings on this one, the gap is between 248 and 344. I don't expect you to get back to 300. I don't care how many earnings, how much on earnings they actually announce. I just can't imagine that you get back to a situation where this one goes back to 300 within the next couple of months. There's too much competition. The ad-based formula, they are, by the way, if you remember, they're using Microsoft's ad base. So Microsoft is getting into the ad space. Apple is getting into the ad space. Amazon is in the ad space. Google is in the ad space. So Google is the number one. Everybody else is taking charge of that. The trading desk. You talk about the trading desk. That's who's puts a lot of ads into your streaming platforms just from a technical perspective. You can see they've trended downward. Now, the trading desk, I don't think they're making money. A personal friend's son was the CEO of Trading Desk. Look at that PE, though. I mean, it's still, even at this price at 52. This one was all the way up at 110. I traded this one. I made money. Probably, I think it was around right before COVID. My friend's son was the CEO, and he became the CEO, and they said, hey, it's going to go crazy, blah, blah, blah. And it did go crazy, and I made money off of it. But their PE is 79. They're only down 42%, which most of Cathie Wood's other stuff is way, way down. But there's nobody really covering it. There's a Motley Fool article that was published this morning at 6:06 a.m. Is the trading desk a buy? You can look at that one. If I were to play the Netflix stuff, I think the safety on Netflix is to invest in Microsoft. It is such a small portion of Microsoft, but I do think those gaps in Microsoft, and Microsoft gets some additional revenue. They can probably talk about that on their earnings call on October 25th. I think that's probably something that moves the needle. So I do like it. Now let's talk about something that I read yesterday. Meta, Facebook. They are spending $1.2 billion on this thing called decentralized land. I don't exactly know what it is. It is in the metaverse. They are selling land in that metaverse. And so they spent $1.2 billion actually developing it. There was a story that came out that for that $1.2 billion, they have 30 active daily users. That, to me, symbols .bomb. It symbols MySpace. It just, again, the symbolism of the resemblance, I should say, of all of that to kind of, again, is Zuckerberg out of touch? And even the Wall Street Journal reporter said it. And this is where you put your own personal lifestyle into the business. Do you use it? Because remember, while Facebook it's being funded by the ads that are on Facebook, it's being funded by Instagram. I use Instagram. Freaking love Instagram. I hate that Instagram went the way that it did. I used to love Instagram with my friends and family's pictures, just scrolling through pictures. There was no political advertising. There was very few ads. The stories were pretty good. They weren't okay. But now it's influencer central. It's Reels. It's the TikTok stuff. Guys, I'm a boomer, a total freaking boomer. And all I want to do is scroll through pictures. That's all I want. I actually talked to a developer friend, and he's like, yeah, we should just do that one. Yeah, we should just go back to what Instagram was and call it like Restagram or something. But again, $1.2 billion on decentralized land for 30 active users. Guys, I can tell you right now, just based on my numbers, there's probably 30 people listening to this podcast. I spent zero on this podcast. I don't advertise this podcast. I don't spend a dime on this podcast. And that's a lot of the designers that listen to me who kind of reached out and were so kind. Everybody was so nice. And they're like, yeah, we'll help you with the cover art on that stuff. I feel bad taking people's help when I can do it on Canva. And I'm going to do it on Canva. And I expect everybody when I change that to give me constructive feedback. Not mean feedback, but constructive feedback. Because I do enjoy hearing what you guys want. Because again, I do this for you guys. Mainly, it's for myself, so I can look at these charts and understand what I'm investing in. There was one that I wanted to bring up yesterday. Let me bring up this. There was TrendSpider did a story on their Instagram last night, and they said, "Who would you bet on, Cathie Woods or Warren Buffett?" Because if you guys don't know, if you look at Berkshire Hathaway and ARK for last year and the year before, ARK was greatly outpacing Berkshire, like killer. Even though she was down last year, she still killed on a 5-year basis, Berkshire Hathaway. This year, she's actually losing on a 5-year basis to Berkshire Hathaway. And year to date, Cathie Woods is down 66% in the ARK-K. Year to date, Warren Buffett is down 6% on Berkshire Hathaway. And Berkshire Hathaway was actually positive up until June, I think. But it's come back down into reality with everybody else. So the question is, who would you rather bet on, Cathie Woods or Warren Buffett? Leave me a comment. You guys on YouTube, I'd like to see the vote on that one. So shout out Cathie Woods or Warren Buffett. Personally, I will tell you, I'd probably want Warren Buffett. And the only reason I say Warren Buffett is because for a very long time, he's been kind of the standard. And I kind of like that. Again, I'm not investing in Roblox. I'm not investing in the ARK stuff. I do have money in ARK because I think her strategy makes sense. Her strategy makes less sense because I think what people do is take her research and take her nightly buys, and then they just buy the stock that they like instead of actually buying her fund. So it actually winds up, hurting her in the end. But I wanted to bring up this one, Hanesbrand, and I went over this on YouTube yesterday. And not to get too personal with you, but I just don't like their boxer briefs. The material that they use is harsh. The cotton isn't soft. And I explained a story. I was in Minneapolis for Major League Soccer, and this was in August. And I essentially I was on the road for I think 12, 13 days in a row, and I needed fresh underwear. I arrived to the hotel on a Saturday. They didn't do laundry over the weekend. I didn't have time to actually go do laundry. I didn't even have time to go get Woolite and then dry, underwear. Kind of, if you guys don't know, you take Woolite, put it in the kitchen, in the bathroom sink, you wash your underwear, and then you kind of blow dry it with the blow dryer, and that's how you dry your underwear. And you get them clean, and they don't stink anymore, and they smell like Woolite. For all of you hikers out there, you completely understand what I'm saying. You just don't have the blow dryer when you're hiking. And merino wool, by the way, for underwear. And I'm off on a tangent. I know I do these tangents. But Hanes brand, I went into Target and I saw, I think a 6 or an 8 pack of Hanes brand. And I felt the material and I was like, oh, God, it's just horrible. But, it's only for a couple of days. Let me go buy them. And I passed by Fruit of the Loom. And I looked at Fruit of the Loom and I think it was $1 or $2 more. But the material was so much softer. And it's so much nicer. And I said, let me just buy Fruit of the Loom instead of Hanes brand. Well, HBI is Hanes brand stock. And if you're looking at on my screen, you can clearly see that it's a downward trajectory, and this one has just been killed. The algorithm loses you 37% versus 55% buying and holding. Your average win is 7%. You've only won 21% of the time. And most of that 21% is pre-March, because since March, you haven't made more than 2%. I think you only had one win, and it was 2%. Their earnings are coming up on November 2nd. Now, this is a cheap brand. I don't even wear their T-shirts. I don't wear anything from Hanes brand just because, in my opinion, it's cheap. Your RSI is kind of in no man's land. It's at 55. The MACD crossed up here at 751. You're trading at 789, which again, that's not a bad move. It's just kind of capitulating. Are there better stocks to bet on than this? Probably. I mean, again, your SOXX, your SOXL, you can probably do a better job of trending that one. But it was brought up, and it's interesting because it's been beaten up. And all of the fundamentals, when you look at HBI on FinViz, if you don't have TrendSpider, just look at the chart on FinViz. You can see it's a downward trending. Look at that orange line right there. I think that's the 200-day, if I'm not mistaken. But that orange line is just, again, it's trending down, and it's there's volume up. I can clearly see that the volume is up here around COVID times in early 2020, and it's kind of stayed up because look at back here in 2016, 2007. Look at 2012 to 2015. The volume was half of what it is today, but it's just getting killed, and so I'm not sure it's actually worthwhile. We can look at a daily chart, and this is just this year. There's no good movement in this. So it was brought up as an opportunity. I think somebody said, I think it may have been Jesse. The dividend. That's what I wanted to bring up. The dividend. Jesse brought it up, 7.72% dividend. But they're paying out all their money. I mean, it's clear with the stock price going from up here at 17 down to 7, they're paying all their money in a dividend, 7.72%. You know what I'd rather have? MPLX, 8% dividend. And you know what? You haven't lost capital value. You haven't lost capital value unless you bought here at the high of 35 back in May. You just haven't lost capital value. And you've gotten an 8% dividend. So I think there's better opportunities out there for your dividend, but I did want to bring that one up. Now, let's talk about energy. Energy just went crazy yesterday, and I'll go over these charts real quick. Energy, you're not done in energy. Energy is still fine. Energy is still a quality play. It may be a little bit overbought at the current time, but COP, you had a buy-in here at 106. You're trading at 121. It's still above the 9-day. You have no volume up here at all for COP. The earnings are coming up November 2nd. Probably wait for this one to come back down into the probably 110 area. But again, it's not overplayed. I just wouldn't probably buy in at this time. Devon Energy, personally own it. It's down 0.72%. You're getting this. You had this kind of fake out of this button hook, which just provides you a leg to move higher. The MACD is significantly up. The RSI is at 60. Their earnings are coming up on November 1st. Devon Energy has, an 8% dividend, 7%? 6.45% dividend. So you can wait for that dividend to come out. It was just paid September 9th. That's the ex-dividend date, not paid. Probably get paid for later this month. But, again, the RSI is out there. For you guys that say Warren Buffett over Cathie Woods, Occidental Petroleum. He's been buying 20% stake in this since the beginning of the year. Let's pull this back. We're going to pull this back here we go at the beginning of the year. He started buying in the 20s. You're at 68 right now. Clearly, you can see that RSI has come down. It's in no man's land. It's at 50. The MACD is crossing up for a second time. It hasn't gotten you out. The buy-in was at 61.22 on September 29th. Clearly, still a good stock. And they have a huge dividend as well. XOM, I personally own this one as well. So the last three, Devon, Oxy, and XOM, I personally own them. I own them at significantly less dollar amount. But I still don't think that, look, you're still above that 9-day. Their earnings are coming out October 27th. The RSI is at 65. I don't know that I'd necessarily buy in, but on weakness, guys, you have to buy into energy. There's a gap here between 88 and 89. Hasn't been filled. Probably will be filled at some point in time. They're going to announce their earnings. They're up above. They're at 101 today. I probably wouldn't buy in. CVX, I said anything under 160, you should buy in. This one's probably going to 180 again. You're at 164. So there's gaps down here, but I don't think anytime soon you're going back to those gaps. You have earnings on October 27th, which is a catalyst. This one is just a crazy. Right now it's overbought at 65 on the RSI. So I don't know that I'm necessarily getting in there, but if it dips under 160, I'm absolutely buying into this one again. If I don't have a position in energy, and I like Chevron, you've got a good dividend there too. I think it's like, let's see, what's CVX? What, 3%? 3.44% dividend. FANG, which is Diamondback Energy, you've got a gap down here between 124 and 125, 123 and 124. This one above the 9-day. The buy-in was 119. It's at 145. I like this one. Let's talk about Pioneer Natural Resources. They actually have oil and they have access to, exposure to natural gas. This one has a gap down here between 218 and 225. The buy-in was at 214. Guys, it covered that gap. And now it's just sitting on the 9-day. Again, that MACD is kind of crossing down. The RSI is at 61. I'm not getting into this because they ran up so much yesterday, but you do have earnings coming up. My point in looking at these is energy is still in play. Absolutely still in play. I've got all of the bull bears. I'll kind of go over those. Bull, UPRO, SPXU is a bear. SPXL is a bull. TQQQ, let's look at TQQQ. And what I want to do is go to Active Trader Pro because I want to show you TQQQ. I want to show you where I went running yesterday. So I'm going to go to a 2-day. When we were on when we were on YouTube Live, I think I went over this and I said, see how this, and now the volumes have changed, these volume shelves right here. But at the time when we were on YouTube Live, I think it was somewhere around here, 16. And I said, guys, I tend to think that this has some volume here. It has some support. And I said it at the 15 handle, you absolutely could get it. Well, yesterday, I think it got down to 1630 was the low on the open. And then it just rose and it just kept going. It had all the confirmation in the world. In fact, you can see it traded right here just below the Bollinger Bands. Today, it's not moving that much. Let's zoom in on this a little bit. You do have, see here where it went below the Bollinger Bands right at 930. There's a 1-minute chart. You have some confirmation there to go from 1948 to 1989. Now, once you get up towards those upper Bollinger Bands, you scalp it and you sell it. Now, if you're trading on a 5-minute chart, a lot of day traders, by the way, have 1-minute charts, 5-minute charts. And Active Trader Pro is doing those funky things where I can't change the time frame on a chart now. So I'd have to restart it. I'm just not going to restart it. But I wanted to show you guys that one because that's the bull run on Active Trader Pro. Yeah. So those are the, and if you want to short the ARKs, and today SARK is probably down. Because it's short. It opened up. Oh, it's moving up. but let's look at the ARKs real quick because ARKs were way up. Yeah, ARK W was up 4%. It's now only up 2%. ARK K was up 4%. It's only up 1%. So you're moving, those ARKs are kind of moving down. There's pressure on them. But SARK is the short of that. Now, I want to go over all the scans that I have. But before I do that, I posted yesterday on Twitter a chart of Tesla. And I said, hey, there's a gap way back here. And we're going to pull it back to this gap where I can show you. Let's look at, I think it was the daily. Bum, bum, bum. Was it the daily that had the gap? Let's look. It was, yeah. So there we go. Here's the chart that I posted on Twitter yesterday. Clearly, you can see there's a gap here back in November 17th, 2020. There's a daily chart. November 17th, you have this gap, and it is clearly moving towards that gap, because if I move the volume chart back to the level of that thing, you can see there's still room down here to about 200. It's a 30% move down to this 138 to cover that gap. That gap is way in the past, but it still poses danger. You don't have a cross up yet. This is the daily, but you don't have a cross up yet of Tesla. But I will show you in the 4-hour chart, you do have a cross up of Tesla. I pointed this out as the volume right there at 200 and that gap at 138. You've got some downward pressure here. So if earnings comes out and there's some type of inventory problem, there's some type of issue, that could be a problem for Tesla with that downward pressure. And that's what I posted yesterday. Now, on the algorithm, when we switch to a 4-hour chart, I'm going to bring this back here, and we're going to go to August 15th, which was kind of the high there. You can clearly see the volume chart is right here at 220. And that's where the majority of people, there is a higher volume here at 293 and 300. So in a shorter time frame, you've got a catalyst or a magnet, I should say, that's going to pull it up. And you did have a MACD cross up with the RSI at 29. Now, 221 is the price. 221.75 is the price that the algorithm puts in there. I'd say 220 is your price target here if you want to play this before earnings. And I say before earnings because when I look at what I posted yesterday, let me see. I posted from a very good guy on the internet who, let me look at my profile, who analyzes Tesla and who has a fairly direct line to Warren Buffett. And he says, this is Gary Black, an open letter to Tesla's board of directors. With Tesla seeing its lowest forward PE, 37, on Wall Street 2023 earnings per share, with $18.9 billion in cash and no debt. That's really incredible. And an investment grade rating, which they just got upgraded to, now seems like an ideal time for the Tesla board of directors to consider a $10 billion share buyback. And he posted this letter. When we go back and we look at this chart, that could be a catalyst with the earnings. If they announce their first buyback, and you guys know Tesla's board is made up of Elon's friends, and Ron Barron, who is one of my favorite people on CNBC. He's just soft-spoken billionaire who just talks very meekly, and you wouldn't think that he's a shark, but he's an absolute freaking legend. But he talks about Elon all the time, and the board of directors loves Elon. Well, I think Elon specifically wants this price up. He's a master at, quote unquote, manipulating the stock price. And I say that with quotes just because I don't think that he manipulates the stock price, but he's buying Twitter. He may need money. I mean, that if you're going to announce a buyback and you've got some weak earnings or you've got some issues, hey, let's push this stock back up to 300. So I think with that open letter to the board, with that idea that the buyback may be coming, with that type of thing, I may put my second half back into, I sold half my lot here right before earnings last time. And it was because I just wasn't sure of the earnings. Well, boom, they gapped up. And it started that soar. I didn't buy back in because I look at the RSI. The RSI was crazy at this time. Look at the RSI now. And when you get down to this RSI and at 220, look at what it did last time. It kind of floundered a little bit. Then you had earnings. Boom. Well, we're at earnings again. So this is why I brought this up is, again, it's a gamble because, while Black says, hey, it's the lowest forward PE, the forward PE is 37.57. The PE is 79. That's expensive. It's down 37% year to date. They're going to deliver the amount of cars that they said they will deliver. Berlin is up to 100,000. I think Texas will be up to 100,000. They're continuing to expand their product line with some probably Cybertruck news that comes out as well. I like it. I may do another buy, and when I do a buy, I do a rather big buy. I mean, comparatively speaking, we're talking, in the tens of thousands. So I'll let you know if I do it. But that's the first scan that I came up with. I was shocked that it came up with a cross up this morning, but it did. Morgan Stanley, we went over that cross up right at, and I think they're going to start trending down. So this one may be a negative, but 79.29. It's trading at 76. So you're seeing it move kind of down. It was the big candle yesterday is what pulled it up. Another cross up is AMD, Advanced Micro Devices. This is one that I personally own. I think my average buy-in price is like 83 or something. I've got a pretty high price on this one, but the buy-in is at 58.92. AMD, again, if we look at the kind of fundamentals on it, the PE is 24. It's expensive in comparison to the S&P. It's down 60% year to date. There is no dividend on this one. If you're going to go into chips, my preference for you to go into would be Qualcomm. Their PE is 10. They didn't have a cross up. I think they have they do have a 2.66% dividend. They're down 40% year to date. They're only 8% above their 52-week low. And if we go back here and look at the chart of Qualcomm in TrendSpider, clearly you can see it hasn't had another cross up. It got you out with a loss here on October 11th, where I thought 120 was a great buy. Well, it's trading at 112. These guys have to renegotiate with Apple. Microsoft just put their chips into their Surface tablet. Again, everything that I like. A business that I've gone over with one of the listeners in Australia. I'm sorry, that's probably offensive, but New Zealand. AppHarvest. Love the business, hate the stock. Cross up at 169. The last cross up was at 185 on September 27th. You got out with a 10% loss. This is a super volatile stock. Your average win is 25%, but you only win 29% of the time. So it's definitely not something that I think you could go into without loving this business. Support the business. The stock, it's just bad. Disney, I said anything under 100, great buy. It had a cross up yesterday at 96.61. It's trading at 96.82. I would buy this under 100. I think it's just a beaten down stock. This is back to, if we look at a weekly, I'm going to bring it back to a weekly, and we go back to COVID, you were trading right in this general area. It was in the 80s at the least of COVID. But pre-COVID, when you look at January, this was a $150 stock. So there's some fundamental reasons why it's down here. If we are going into a recession, but they have pricing power. Look, if Delta, reported yesterday that they have pricing power, why doesn't Disney have pricing power? If Delta can fill up their planes and continue to raise prices, That one had a cross up here on October 4th at $30.47. You're trading at 31. Why do we think Disney doesn't have pricing power? Li Auto, which is a Chinese automaker, had a cross up at $20.05. It's trading at 1986. The only reason I bring this up is because the average win is 28%. You win 25% of the time, but a 1 in 4 shot of making 25% might be worth it. And again, you've kind of put in this floor. That's the only reason why I do this. See this one where it went from 25 up to about 28 or so, but see that volume? You just don't have the volume here to kind of probably do that, but you may have it to push it from 20 to 22. 22 is not a big move. When we pull it back here to the highs, look at that volume. See, the volume level right there. You're trading at 19. It doesn't have a lot to pull it back up to 22. But if you make it past this 21 mark, it's probably going to 22. But that's one. Sundial, which is a retail trader favorite. Make no mistake about it. This is not one that you invest in. This is absolutely one that you trade. The average win is 21%. $2.17 is the buy-in. $2.20 is where it's trading at right now. This one you need to look at on SDNL because I need to see this volume. The volume on this one, 6 million in 10-day, 6.3 million in the 90-day. So it doesn't really have volume level to push it up there, but you can see it traded all the way up to 230. And 230, from 220 to 230 is a good move. From a percentage standpoint, it's a good move. SEDG, Solar Edge. This is one that I've traded and I've talked about around the 200 mark for quite a while. It had a cross up here at $200.07. You can see just recently, September 14th, this was up in the $300 range. It's not making money. Let's see. Solar Edge Technologies. I think they are. Well, it is making money. 78 is the PE. So it's expensive. Only down 28% year to date. So with a beta of 1.25, which means it's just super, super volatile. Look at the August 5th, $389 price target. June, $334 price target. Here is Zacks is always junk. Business Wire. Solar Edge joins Rocky Mountain Power Watts solar program. Estimating the fair value. It's Simply Wall Street. That's a great article to read if you want to play this one. I will probably read it after I get off this podcast. But Solar Edge had a cross up, and I like that one. Plug. This is an EV play. This is one. I think this is one that Josh Brown on CNBC likes. 1922 was the cross up, and you can see here it's traded all the way up to 30. It's just beaten down. The RSI is at 29. That MACD is significantly down. They have earnings coming up here on November 8th. The problem is, look at this. You lost 33 cents per share. You lost 27 cents per share. Continue to slide down. You lose 30 cents per share, but the damn thing flies. So I would do my best bet on this one. Just do your due diligence. Cisco. Let's look at Cisco. Cisco, the reason I brought it up is this is just a tried and true. This survived the dot bomb. And at $40, I can't believe that this is this low. This is server space. This is old technology. The PE is at 14. The forward PE is 10. It's got a 3.74% dividend. September 21st, Barclays came out, said equal weight. But, look in August, look at those price targets. There's nothing at 40. Most of them are in the, high 40s to low 50s. But it's just has not, this is the year. Just has not been a good stock this year. Technology's been taken down. But Cisco, if we're down there and we're at, the bottom there, then probably a good one to look at. Another one, we talked about Duke Energy having a cross up yesterday and getting beat down. This is Southern Company. This is my electric company. They own Georgia Power. And look at this one. I mean, it's just over from September down here. It's just been beaten up. This is just like Duke Energy. Now, the MACD has crossed up at $64, $64.04. I couldn't find anything on FinViz that tells me why this dropped like this, other than, hey, we're going into a recession and people, energy prices are going up. Well, they're utilities, so they can't raise their prices just overnight. They're regulated. Southern Company is regulated. Duke Energy is regulated. If input costs go up, they can't raise their rates fluidly enough to actually cover those costs. So you're seeing it go down. Now, here's what you have to know. If we are going to a recession and energy prices do go up, there will always be ways for these guys to make money. There's always ways out. There's always valuation that will come back. So at $64, let's look at Southern Company. Because what I really wanted to show you is, look at this, August 4th, $87. You're trading at $60. $87 is the most recent. If we look at Duke Energy, and we do the same thing, 17 PE, 15 forward PE. Look at this. The August 5th, they put it to 114. It's trading at 89. Trading at 89. Let's look at Southern Company's PE. Duke Energy is 17. Southern Company is 22. So Duke Energy probably has a better shot at it than Southern Company. But I just like that downturn, specifically in a utility, just because I think it does have an opportunity to bounce back. So those are my scans. That's it. I think I've done about an hour. But if you have any questions, let me know. Hit me up. I'm going to kind of take out. Let's look at SKT. This is Tanger. I particularly like Tanger. I like their outlets. Jesse wants me to look at SKT. Look at that. 1402. You still got confirmation. You have a couple catalysts here. 66 on the RSI. The dividend date is October 28th. The earnings date is November 2nd. Their dividend is significant. I mean, don't get me wrong. That's one to hold on for it. 4.99%. You can see it's clearly got a range here. And these are two. Yeah, look at that upward range at 18. Do I think you sell it? Jesse, my take on this one is if you're in profit, you have to decide, okay, is this the top of the button hook? See the button hook there at 18? Are we heading back up there because you've covered this gap? See that gap between 15 and 1587? You've covered that. So I don't see a reason for you to sell it. But in this market, if you've got profits, again, I would say get out of it before the November 2nd earnings. It still has some confirmation because it's above that 9-day. So I don't want to get you out too early. This gap here is covered back here. That's been covered on the way up and the way down. So that's irrelevant. But I would say before earnings, I would get out of this one. Now, another one, the other one that I traded with Tanger was SPG. And this is one that just hasn't, you had a cross up here September 28th at 91.24. That RSI has moved up a little bit at 58, but you're trading at 96. You still have a gap up here between 102 and 104. In my mind, if you're not in Simon or Tanger and you're wanting to get into a mall, this is one that you'd get into to cover that gap from 98 to 102, 104. It's not quite 10%, but I think you could make 10% because I think it'll cover that gap and continue to go up. Your earnings are October 31st. This will be, if they typically trade in tandem, Simon and Tanger. Tanger has a 5% dividend. I think SPG has like a 7.3% dividend. They're down 40% year to date. I mean, Tanger is probably the same kind of thing. They're only down 16% year to date. So I like Tanger. I mean, Tanger's just been the cheaper one to trade. It's got a lower dividend. It's got a higher beta score, so you can typically make money. Your average win on this is 13%. You actually win almost 30% of the time. So the algorithm makes you 25%. Buying and holding the asset, though, makes you 156%. So this one just, again, outlet malls just, they're always packed. By the way, ARK has turned negative. So I'm looking at the averages. We've turned negative. So it's a rough day. But after yesterday, I'll take a rough day. Amazon is down at 111. Apple is almost crossing 140 again, below it. CrowdStrike down at 150. Ethereum is up 3%. ETHE. GBTC is up 1.24%. I'm just looking at my stocks. Morgan Stanley down 3%. We're getting killed. Probably expected after yesterday. It's a Friday. I'm hanging out on YouTube. If you guys are still listening on the podcast, thank you for listening. Thank you to all the supporters. Thank you for everybody. I will talk to you guys later. Have fun. Okay, that was a bad podcast because you guys fuck. Export to disk. I'm going to export that. You guys fucked me up on YouTube. I got a high-pitched squeal. Zephan, you killed me. And Jesse, do you guys still hear the high-pitched squeal? Maybe I have to quit this. Okay, I'm bouncing the podcast. It was an hour today. God, I rambled on. Oh. What do you guys want me to look at? Well, we're waiting for this one. Good calls, Jesse, on SKT. But see that up there? Up there, man, yeah. I think I went over this one a while ago. I traded this one during the pandemic a lot. AMD is down 3%. So I think I did wrong again. Your SOXL, you're down on. Did you have a cross up on this one? You didn't have a cross up, but you're down. Guys, this is just, I mean, if chips continue to get beaten up, SOXL. Oh, you know what I didn't go over? Okay, it's been the last few streams. That's because Zephan hasn't been listening. Boyle was up. You're still in that $53 trade on Boyle, but it's trading at 48. It was up in pre-market. Let me see. Look at Boyle. Come on. Oh, it's getting killed. Look at that. It opened up at 49. It's down 4% today. But you know what's up? KOLD. God, KOLD has been a killer of a stock. It's up 4% today. Let's look at this one. So you get in here at $10 on August 19th. You get out September 15th, so about a month with a 10% gain, excuse me. And then September 19th, you get in at $13, and you're at $18 now. So almost a 40% gain. Wow. Your average win is 21%. God, that's nice. Oh, there's my neighbor and her dog. But you can see KOLD just has not been. It's making a turn. I still say Boyle. When I bring up the Boyle chart, I'll have to work on that this weekend if you guys are hearing a high-pitched squeal. I'll listen back to it, see if I hear it. I usually watch my stream for like 30 seconds to a minute, just check the quality. But I watch it on my home theater. I've got a 7.1 surround sound home theater with like a 70-inch big screen, all the amplifiers and shit like that. I had my friend set it up for me. So if I hear a high-pitched squeal, I'll be able to hear it in there. But I usually check the quality in there. It's usually pretty good, other than my high-pitched squeal voice. But check this out. So I continue to say this gap up here between 87 and 92 will get filled. But here's the killer. So if I look at a daily, and remember this is a decaying asset, so it will not be a long-term investment. I just talked to my dentist friend who is still in UCO from 2020, and she's making out. Oh, maybe I'll look at on the phone. Okay, Joe. I'll listen for it. Yeah, I think it was Willie. Willie sends me the voicemail messages on Anchor, and Willie's got the first time he sent me a voicemail message, it was he had the fire alarm chirp with change your batteries, and when I played his message, my dogs went nuts. But see Boyle here, back in September 2020, we're gonna go to I'll go to a monthly. Because you can clearly see Boyle is not a strategy play. And look at the volume. The volume levels on this started picking up when people really started day trading in July of 2020. Look at that monthly. It's just a decaying asset. When you go weekly, you can see it even clearer and see the volume level there. And if we bring this back to about that gap, which was, I think it's around here. This is where it is. And we look at the amount of people who are buying. It's clear people are just buying in this $50 to $55 range. So getting back up there to that gap, you've still got the second set of people who are still holding. And this volume level is put at August 15th. So the second level of people who are still holding from August 15th are holding in that $100 range. So that's why I like this one. Let me quit GarageBand now that it's done doing its deed. An hour and 4 minutes I went on that podcast. I got a call from my friend this morning at 6:30 in the morning. And she woke me up and I was like, hello? And she goes, okay, talk. And she's like, Rick, our mutual friend Rick, she goes, Rick just tells me that you love to talk. And Rick is the guy that I do the political podcast with. I call it political, but I don't think it's political. I think it's just more election focused. We got an interview with Vice News today on that one. Atlanta Journal-Constitution, which I told the reporter, I said, oh, you guys are the guys that screwed Richard Jewell. Yeah, he wasn't a fan of mine after I told him that, but I'm not a fan of what they did to Richard Jewell. He was a very meek person. Okay. Anything you guys want me to look at? It's Friday, man. I would not buy anything today. Wells Fargo, JP Morgan Chase, United Health. Let's look at this one. I got the dog coming in too. What are you crying over? I don't know why she's crying. United Health. Let's look at United Health because I said anything under 500 you should absolutely buy. Hold on 1 second. No. You're crying for no reason. So United Health here. Look at the candles. Remember when I said you should buy this under 500? It's what? Yesterday? 2 days ago? $4.99? Got down to, $4.99. It's at $5.25 right now. So this is one, their earnings are, they announced earnings. Let's see UNH. Let's see all the upgrades that UNH got. Oh man, Christian, you're hearing the high-pitched noise too. So this is one, their earnings are, they announced earnings. Let's see UNH. Let's see all the upgrades. Christian, I'm not hearing a high-pitched noise. I wonder. Oh man, Christian, you're hearing the high-pitched noise. You know what I'm going to do? Hold on. I'm going to go to my other YouTube channel on my phone. And I am going to look at my own. There I am. You know what I'm going to do? Hold on. I'm going to go to my other YouTube channel on my phone. And I am going to... I got it. Look at my own. There I am. You know what I'm going to do? Hold on. I'm not hearing the high-pitched noise. God, that's wacky as hell. Why are some people hearing it and I'm not hearing it? And is it because, I have tinnitus? And I just can't hear shit. What was I going to do? Yeah. 575 is the latest price target on UNH. God, I'll play it back and see what I hear. Yeah, I don't hear it at all for some reason. Some people hear it, some people, and I don't. And even back up here, hey, Zephan Warren Buffett, James Warren Buffett. Yeah. If you guys weren't listening before, I said, hey, which one would you do, Warren Buffett or Kathy Woods? Because Kathy's down 66% year to date. Warren is down 6% year to date. But which one would you bet on long term? But yeah, there were a bunch of people who heard. Zephan heard the high pitch noise. Jesse heard it. Jeffrey said, hey, it's fine. See? You guys have dog style hearing, man. My dogs are... Hey, Daisy, come here. Penny, where are you? Can you hear that? She was just in here crying. I wonder if they're hearing the high-pitched noise too. Huh. I wonder what it is. Does it sound like a fire? Like, is it a constant? Again, I have a music background, so if you told me the pitch, I could probably figure it out. Is it an A note? Is it C sharp? Is it whatever? And I don't have perfect pitch, so I'd have to pull out the guitar. But I was a drummer, so I'm not that talented at guitar either. God, United Health, why didn't I get that under 500? It's because I don't want to sit in front of the freaking computer all day. And I do God, Tesla, man. TSLQ. Constant high pitch feedback. What would be giving me feedback? Here. You know what? Tell me if you hear it now. I turned off the light. The light may be causing it. That might be it. I'll turn off the TV. Tell me if you still hear it when I turned off the light. Let me see if maybe these are them. Honestly, I just don't hear it. Gone. Huh. So it's this light. It's causing some type of interference. Is it back? It's not touching. Here. I messed with the gain. Okay. It's this. This is what it is. It's this light. So tell me if it's on, if it's interfering now. And then off. Yeah. Well, since seeing me isn't that big of a deal, I gotta ask Rick if I have a high pitched, because I record with him. It's like water torture, man. I'm like waterboarding you guys with that high pitched squeal. By the way, anybody else see Kramer? Kramer's trending, and the reason the fucker's trending, yeah, he runs the CNBC. Yeah. So the reason Cramer's trending, I'll leave it off, is because yesterday he called people dummies who bought before the CPI number. And he is out of control pissed about this inverse Cramer. You guys, there's an ETF and they applied for it, and they may actually get it, is SGIM and LGIM. So when Jim says, I like NVIDIA, here, NVIDIA is great, and he goes and buys it for the his charitable trust, you will go and buy SGIM to short him. You know, when he says, hey, I like the market, I think it's an overall market ETF. But so he is, I mean, when you look at his Twitter, he is just out of control, upset at the SGIM. And by the way, he has this tequila that he's kind of promoting now. The guy is just one big freaking, you know, people take his word for gold, and he's just not, you know, again, I've lost, I think, 30% year to date. Let me see where I'm at. I'll tell you exactly where I'm at year to date. I know he's lost more than I have. Year to date, I am down 26.7%. So, much rather listen to the feedback than Cramer. Yeah, he's entertainment. And my problem with him is not that he doesn't know what he's talking about. He does know what he's talking about. And every investor has their down days. Nobody's perfect. Everybody makes mistakes. My problem with Cramer is he talks about things like they're absolute facts. And just for instance, he told, and I think I was telling Rick about this yesterday, he told on a Friday during the financial crisis in 2007, 2008, a caller called up into his show and asked about Bear Stearns. And he said, I have a large position in Bear Stearns, which is down 50%, Jim. What do I do with it? Jim said, you hold it. And the reason you hold it, and this was like a Thursday or a Wednesday or something like that, and the show was airing, and he said, you absolutely hold it. I know those guys over at Bear Stearns. They're good people. They've told me there's nothing fundamentally wrong with their bank. They will not go under. They will survive this. It was literally 2 or 3 days later. The stock was at zero. He did the same thing, and I know there's somebody else that listens to me. He did the same thing to me with PayPal just earlier this year, right before their earnings. I know that I just talked to the CEO of PayPal. He's told me that everything is fine. We just bought it for the charitable trust. We completely are behind this one. That was at $220. Let's look at PayPal right now. I'll tell you. I think it was, I'll tell you the date that I bought it. Let's see. All investments, go down to PayPal because I'm still fucking holding it. I don't know why. It's a super small position, so it's not a lot. Was this the one I bought on 12/1/21? So it was just, we'll just do a daily so you can see. And I think I went over this chart before. The feedback came back on, Christian. So here, 12/1. So here, I bought it right here. I didn't have very many up days. Not very many at all. Yeah, it's going back to 200. Sweet. It's going back to 200. Fantastic. I thought it was going to cover that gap. Didn't. So when it gapped down here, and this was right after earnings, yeah, they're great. Their earnings are just, they've been beaten up unfairly. I talked to the CEO. Still great business. Still doing well. Still growing. Next, kind of flat earnings. See, 111 to 111. They made their bid for Pinterest. They realized that was a mistake. I'll hold on to it because you know what? Even though there's a gap down here, there's a gap up here. I didn't dollar cost average because I didn't trust it. I just held it. If you don't trust it, you don't dollar cost average. If you trust it, you dollar cost average. Like something like a Disney, something like a Boeing, you dollar cost average it. You don't, if you have a tax advantage like a tax loss harvesting, you take the loss. If you don't, you dollar cost average it. If you trust it, if you don't trust it, then you should absolutely stop loss at about 10% because it's just a falling knife. And this is a perfect example. It's just a falling knife. There hasn't been an update on this one. So, yeah, I got to go shower, guys. I think I'm going to go for a 5-6 mile run as well. I've been trying to lose weight. Woohoo! I'm down from 13.4% body fat to 13% today. I had some cheese last night. You guys, I splurged. I had cheese. What did I have last night? I had nuts and cheese for dinner. I had made a couple of eggs for lunch. And I had oatmeal this morning. So I do have some carbs in me. So I had some oatmeal with some maple syrup. And maybe it's going to be 75 degrees, so maybe I'll have an acai bowl for lunch. Which is not a weight loss food at all. But I'm down. Am I down? I think I'm down today by a lot. Let me see. Yeah. I lost all of yesterday's gains. So are we down a lot? No. Where did I lose it? Let me see. Am I losing it in Apple? Yeah. Apple's down almost 2%. AMD's down almost 4%. Is energy up? Devon is down 4%. Wow. Let me look at Devon Energy. What happened? This may be the button hook that we've talked about. Oh, look, it lost all support. What the hell's going on? Look at this. Guys, on a 1 minute chart, you're going to have a MACD cross up and you're trading outside the Bollinger Bands here, but it hasn't gotten above that 9-day. It's under 70. I am not starting a weight loss podcast. Dude, I'm 13% body fat. I mean, here's my health journey. So you guys know I'll get personal with you. So it was May 1st, 2011. I sat in my bed. I was living in Florida and I played Halo on Xbox. I think it was Halo. It might have been like a football game. I forget exactly what day it was. I think it was like a Saturday or a Sunday. And I sat in my bed and I played video games from about 8, 9 o'clock in the morning till about 1 o'clock. I ate, one of those big like family bags of peanut M&Ms. And I had a half gallon of Red Label fat milk. In those days, I would drink Red Label fat milk. I didn't like skim milk. Didn't like anything of that sort. And so I just, ate the regular fat, drank the regular fat milk. And so I had about half of that half gallon. And I had the whole bag of M&Ms. And I'm telling you, it was probably, 4,000 calories, somewhere in that neighborhood. I weighed about 210, 205. I was over 200, 205, 210 pounds. And I got up at 1 o'clock in the afternoon and I looked at my dog who was handicapped. And I was like, maybe I just don't feel good. I should go out for a run. Well, I lived on a golf course and I got out of the house, went for a run. Now the clubhouse was about a quarter mile away from my house. I couldn't make it even halfway there before my knees just kind of gave out. And I realized, shit, this is bad. So I went raw vegan. That day, I went raw vegan. So, and I started walking / running 3 to 5 miles a day. And so that was May 1st. The next day, I think I had a banana for breakfast. For lunch, I had some carrots and hummus. And then for dinner, I had a salmon patty with sauteed spinach. And the sauteed spinach, it was basically, it was sauteed not in olive oil or anything like that. It was just sauteed to get it shrunk down and to make it eatable. From a salmon perspective, I didn't put any oil on the salmon. I broiled the salmon with just some salt on it. So it was a dry salmon. And I gave up all my sodas, sugary drinks, and stuff like that. So I estimated that I was probably eating somewhere between 700 and 1,000 calories a day, because all I would eat, again, it was raw vegan. So I was eating fruits, like I'd eat an apple. I wouldn't cook it. I did, saute the spinach. I steamed some broccoli every now and then, because you can't eat broccoli raw. You got to steam it. I would steam asparagus, and just eat like those types of things for dinner. I didn't particularly like beans. Beans were too heavy. And so I didn't eat a lot of beans for my protein. I kind of phased out the meat. And so I was protein deficient because I didn't like beans. But what happened over 90 days is I went from 205 pounds down to about 145, 150. And I essentially just got all the body fat off. I think I got down to about 6% body fat at that point. And again, I was running 3 to 5 miles a day. I wasn't weightlifting. I wasn't doing anything. I was so tired during those 90 days that I would wake up in the morning at about 7 or 8 in the morning. I would do my work. By 12 o'clock at lunchtime, I would go out for my run, but I had no energy. So I'd come back from my run and I would just fall asleep. Literally just fall asleep. I had no energy whatsoever because I wasn't eating carbs. I wasn't doing anything. My brain was all freaking wired out of control, like just nutso. And so I essentially just, lost all that weight. I think it was July where I started adding back in some fish. I started adding back in some beans to get the carbs. I didn't put bread back in. I didn't put any processed carbs in. Even sweet potatoes. I think it took me a while to even put back in sweet potatoes. I wouldn't eat regular potatoes. I just continued to drink water, and I started going to the gym. I think I got up to about 12% body fat, but I had a significant amount more muscle on me. Now, mind you, the mental game of that is way harder than the physical portion of that. But I was focused. It's kind of like trading. You focus and you learn as you go, and you learn what your body likes, what your body doesn't like. And it was a total learning experience. But I ran every day, I think, for the next 3 years, 3 to 5 miles. Today, I came back. I like to be at about 160 to 165. Like I said, it's 13% body fat, but those scales are super inaccurate. I'm sure I'm probably 18 to 19% body fat because I still eat a lot of sugar and I eat bread. So, if I cut those things out, I was 170 when I came back here to Atlanta. And so I've got 6 pounds to lose. I think this morning I'm 168. I'm down from 13.5% body fat on the scale, which again, I just look at the trend, not necessarily the actual number. I just look at the trend, but I've gotten down to 13% from 13.4. I'll get that down to about probably 12.5, and then I'll go on an ice cream binge. But yeah, talk about a falling knife. Look at Devin. Guys, if you're not in Devin under 70 right now, hoofa. Let's look at the... Yeah. Oh, I should switch there. That's what I'm looking at. That's exactly what I'm looking at. Look at that. This is a 1 minute chart because I don't have... That's a 1 minute chart. See how it got outside the Bollinger Band, but it was kind of brought back to that 9 day. Now it's at the 21 day. Now it's got confirmation here at 69.55 above that 9 day. And see how the volume shelf is lifting here, but the biggest volume shelf is still up here at 71. This one's quickly starting to build. But these two up here are still large. It's going to take a while for this one to build here. But see how it's going? It's got that confirmation. This is day trading at its best. And you don't do this for a 10% gain. You do this for 4 or 5, 1% to 2% gains. It's free trades, man. Don't be afraid. Throw your money in there. Say you have $100. I'd throw probably 50 in here at 69. Get it up to 72. I'm sorry, 71, 71.20. I think right between these two volume shelves here. See how this one's greatly outpacing now? This one's going to start bringing it back down. See how these are shrinking? Everybody up here is starting to sell out. And see how the Bollinger Bands are sinking up and they're getting closer? Those two mean you're getting ready for a run. Now, you do have confirmation above the 9 and the 21. So it's likely with this MACD going up like this, and the RSI is at 47. When you get up here above 50 in a 1-minute chart, that RSI likes to go down. You can see right here, look at this previous run. See, there's a 1-minute chart. It crossed up, the MACD crossed up, you got the RSI, boom, you hit oversold right here at 73. Immediately just crashed. And it immediately crashed. Again, these are 1-minute charts. So if you didn't get out at this 72 pace here and you held on, see that button hook right there? I talk about it a lot. It's outside the Bollinger Bands. Absolutely 100% when it's outside the Bollinger Band. It won't stay outside the Bollinger Bands. So get the hell out. This one, you're seeing the 9-day come up here to the 20-day. I have to do this. Hold on. I have to modify it. I don't know why it keeps reverting back to 20-day instead of 21. How do I save this? I think let's do save. I think it'll save there. But yeah, if you're looking at this with me, again, 69, I think 69.90 was where I said to get in. It's just lost its confirmation, but I'd probably hold on to it because these Bollinger Bands are there. This is just going to take a small break. Now, here's the thing. Trade the trend. The trend is actually down. But Devon is not one that I would, at 69.90, if I had bought it at 69.90, am I immediately selling out for this loss here? No, I'm not getting nervous. I'm sitting here and I'm holding on to it because the reality of the situation is you can hold Devon at 69.90. It's not a problem. Why is this? Oh, it's... I guess there's Fed officials talking. That's why we're seeing the market move down. I had to turn on my TV again. I don't want the TV on. I'm going to go running. It's 10:30. I need to be back. I have that interview with Vice News at 1 o'clock. So, okay, guys, I think I'm going to jump off here. Now that I know that it's the light, I'll figure out something. It might be what it's plugged into. So I might need to plug it into something else. It could be the frequency as well. Okay, I'm going to play. As long as you guys are listening here. So when I turn on the light, it's there. Tell me if it's there again. You guys are my test audience here. And see, it's building that shelf right at 69.70. It's back. Okay. Tell me if it's there now. I changed the color of it. And there's a delay. That's why I wait. There's a delay in the chat with it uploading. I changed the color from, 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 I changed the col Warm to cold. Noise. Okay. Let me try this. Okay. Pitch changed. Boom, boom, boom. I can't hear it either. I turned up. No noise. Okay. It's the plug that it's in. And my guess is that I probably before had it plugged into a different. I plugged it into a different outlet, different USB port. So, okay. It's the noise from. Interesting. Okay. And I can plug this in. I'm glad there's no noise. Boy, Devin is just really hanging out here at 69, 70. Boy, SOXL, by the way. What are we down 10% on this? I'll show you the light real quick, Cameron. It is one of these ring lights. It is LED. I think it's that. Yeah, it's LED because it doesn't have any. It's this. Ooh, why you need to be tightened. Bum, bum, bum. Okay, that's tightened up. It's this ring light. See, I do it because I'm not in a super dark room. Like I have overhead lights. But when I looked at myself, I think it was $10 on Amazon. Hold on, I'll tell you exactly what it was. Let's see. My friend said she had one that she could give me, but then I was like, you should use it for Zoom calls because she's much prettier than I am and nobody wants to see me. Your orders. Light. Yeah, that's what I think it is. 12-inch selfie ring light. View order details. I paid $22.89 for it. Which, by the way, it's probably cheaper. No, it's $29.99 now. Oh no, $24.99. You can get a $5 coupon. So it's not bad. It lights it pretty well. I don't do my photography business anymore. But I don't have any light. I didn't have any lights because I basically did. Ooh, look at this, guys. SOXL. Look at how it lost. It's down 7.9%. This is the long triple levered semiconductor bull. So it's the long. You want semiconductors to go up in a down market. The VIX is back up at 32. Amazon's losing again. It's at 110. Microsoft is down at 231. Tesla's down at 214, by the way. Yeah, I think yesterday was just a fake out. I think we're going back down to that 3,200 on the S&P, and we're at 3,600, by the way. Wait, you can still hear the noise? You guys confuse me sometimes. Because I don't hear the noise in the room. But obviously there's an interference here. Maybe with the volume of that? And it's not there. Shit. Oh, see, Jesse doesn't hear it, but Christian still hears it. Boy, see, that's weird. Okay, I'll figure something out. Let's go back to Devin. This is what I used to do. I just get wrapped up. This is why I did I moved from day trading to swing trading. I get so wrapped up in these charts. Okay. No noise. Maybe. Very well, maybe. That's why I hate YouTube, man. I hate doing live stuff because I can never tell. Interactivity is great. I wish you guys could talk on this one because I'd open it up. I could open up spaces on Twitter. Yeah. I think, Christian, it was delayed. Perfect. Thank you. Guys, I appreciate you sticking with me and helping me troubleshoot that one. We lost support. So if I were day trading this, I'd be out for that 40-cent loss. I'd be taking it because you're going below the Bollinger Bands now. There's no reason to stick in this one. See how it lost its support there? It went below that 9-day. Out. Take the loss. This is why you trade the trend. Fuck, the market just looks bad. I don't know what happened, but... Okay, guys, we troubleshot that. I am going to go for my run. I suggest all of you guys get in shape if you're not in shape. I don't know what kind of shape. I think most of you guys are significantly younger than I am. My friend John, who was a singer in the band Hawk Nelson, got to know him through Instagram. He is on his fitness journey. He and I talked about it. Yeah, I could do that. Maybe I should just take a phone call and kind of, put you on speaker and stuff like that. I thought about last night too, because I co-host that other podcast with, are you buying SQQQ? Let me see, Joe. It's a little bit stretched. It's Friday, Joe. It's a dangerous call. It's already up 5%. The 21-day. That VWAP's right at 59. It's trading at 62. See that volume shelf right there, 59? The volume shelf's here up at 60, 61. They're building. This one's going to get smaller. But see, the Bollinger Bands haven't really expanded too much, but you're trading just outside the Bollinger Bands. Again, trading the trend. Look at that 200-day. You're moving up. So I can't argue that it's not a bad play. Or I should say, I shouldn't argue that it's a bad play. So the 21 days at 59.28, the 9 days at 59.08, the 200 days at 59.59, but you're trading well above that. When you cross that 200, let's look at Devin, for instance. Notice that chart with the 200. If Devin were to come back up here, it's using that 200 day as resistance right here. And it's not even close to the 200 day. And you're trading below that Bollinger Band at this point. That would be, for instance, if you wanted to, quote unquote, get into Devin, and you saw this, I'd probably move it to a 5-minute chart if my Active Trader Pro would allow me to. Oh, there we go. So you're just inside that Bollinger Band there. We're going to move this a little in. See how it just trades outside there and then you're getting back in? When you're up closer, it's using that 9-day as resistance level. You want to get to a point where it's using that 9-day as a support level. And when we go back to SQQQ and we go to the 5-minute chart, I'll tell you, it's going to look a lot different than See, you've got support. And it's not trading outside that Bollinger Band. And you still have support above that 9-day. So, I think DVN's God. Again, remember how I said yes? I think I even said it on the podcast. You're getting that button hook. If you're in on DVN, get the hell out of it. Or I'm sorry, DVR. Let's look at DRV. That's the one that I wanted to look at. I said DRV. This is the short real estate one that I love. Yeah, see, you've got confirmation up here. And you've got the volume shelf right there. You got 1 million shares in a 10-day, 561,000 in the 90-day. Yeah. This one's just it's been such a good stock. So I'm going to switch it back to see what I'm looking at. Jesse, I mean, just wait till Monday if you're looking to get long. I think no reason to buy into energy on a Friday when, there's so much crap going on. Look at the candle. It's bouncing off that 21 day, the 9. See that the yellow line? It's bouncing off that 21 day. And it's using that 9-day as kind of its support level. Right in the middle of that right now. I saw the button hook happening. I'm like, get the F out. It's Friday. It's going to fake me out again, just like it did back here at the end of September. Okay, seriously, I'm going now. We fixed the squealing problem. You guys have a good weekend. Reach out to me on the socials if you have any questions over the weekend. I don't know how today. I'm not buying anything today. I'm not selling anything today. At some point I have this interview at 1:00 and then I've got to talk to a friend just sold 2 of his businesses. He's kind of my age and he's looking what he wants to do next. So I have to kind of guide him on how I live my life, per se. I think he's got 4 kids though. He's my age. I think he's got a good nest egg, if you will. Sold his businesses. He just doesn't know what he wants to do with life, wants to do some consulting. So I have to get him involved. He's in California, so the time difference makes it a little difficult. But you guys have a great weekend. Again, look in the description for the link tree. If you're not subscribed to my socials, go on there. Support the podcast. After yesterday, I would have said if we had another up day, it was fantastic. We're not going back down to 3,200 on the S&P. But today, it's just, you're down. The NASDAQ is down 1.86. The S&P is down 1.5%. The Dow's kind of holding up the best of the 3. And it's probably energy that's holding that one up. Here, you know what? I'll show you how to look. Look at the heat map. Healthcare, United Health is up 2%. Airlines, look at Delta up 2%. You know what's up? JP Morgan, Bank of America, Wells Fargo, Citi, USB Bank Corp. Look at that. Verizon, beaten down. Fiserv in the technology sector. Ansys in technology software. Look at travel. Booking Holdings up 1.5%. Look at consumer cyclicals, Marriott and Hilton, both up 1.5%. Look at the Kraft Heinz Company up 0.57%. Look at Archer Daniels. This is a farm product. This is kind of commodity space. Look at Kroger. Kroger's down 3%. They're merging with Albertsons. Look at energy. PXD down 4%. Look at how bad this is. Again, I'd say energy is not overdrawn. The only reason this comes down is because it thinks that multiple countries are getting into a recession. And so, that's going to put some pressure on oil. Still don't. They're overbought. Are they reaching that pinnacle? Maybe. Look at agricultural, Cortevera, CF Industries, which has been way up at 100. It's down 5%. Mosaic, we talked about Mosaic in the mid 50s. It's kind of been brought down. Freeport McMoRan, I talk about that one all the time. That's a commodity play. Gold, NEM. Then you're looking at materials. We can look at Cleveland Cliffs. I think that one's going to be down too. They have earnings coming up. Yeah, look at that buy at 13.17. You're trading at 14.64. Earnings October 24th. So opportunities are there. It's just Friday. I'm not buying into anything. Let me know if you guys have questions. Okay. See you guys.